This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In today's video, we're going to be going over the data sets. There again is no earnings this week, and I will be doing a very quick technical analysis going over the SPY for December 23rd, 2025. And with that said, let's go ahead and jump straight into the data. And going over the data sets, we had the 2-year auction today on the 22nd. Now, it did not come in the best, however, it wasn't the worst. It had a very, very slight tail to it, so that means that it traded slightly above what the original release of the, or when they started the actual auction. The rates were lower when they started than when the auction ended, so there was a very, very small tail to that, meaning, there was that difference in the increase in the yields. I thought there was some PCE data, or yeah, PCE data today. It's my investing.com, however, that's bugged, so it continues showing that PCE data throughout the week. I know last week it was showing it, I believe, on Thursday, then on Friday, then on Monday. Now it's showing it on Tuesday. I don't know if it's actually going to happen tomorrow or not, so we will kind of put that one in the back pocket for tomorrow's video, or I guess later today. Now, the big data sets for tomorrow really are the GDP. We have the GDP quarter over quarter and the GDP price index quarter over quarter. Now, these were both on a major downtrend until July. And July is when we started having the tariff announcements that it was going to start in early August. And, basically everything was pretty much settled at that point. Now, with that said, it caused the GDP print to be heavily inflated. And it was heavily inflated because the imports basically did not happen during that period after that because of the tariffs. And there was a lot of uncertainty whether the tariff rates were going to increase or decrease, whatever it might be. There was still just a lot of hesitation. And I know that during a period of that time there was the whole tariff war with China. Now, that lack of importing caused us to have extra money, essentially, and that extra money looks very, very good on the GDP numbers. However, it's not real in terms of if the economy was actually flowing correctly and flowing normally. We would have very, very likely had a continuation within that downtrend within both of these data sets. So tomorrow's data is going to be very, very key. Now, there is a lot of different forecasts between the GDP. I have seen some forecasters saying they expect a potentially negative quarter over quarter GDP. I've heard some expecting a 1.1 to 1.3%, and I'm kind of in that area. I'm expecting a very, very low GDP print this time. And then there's quite many that are expecting this 3.2% to all the way to 3.5%. Now, with that said, that means that there's a ton of speculating going on behind this data set. That means that this data set very, very likely is going to cause a very large reaction from the market, both, and when I say volatile here, that doesn't mean just downside. Volatility can be to the upside as well. So this will be a very, very high volatility, set of data. Now, along with that data, we also have personal spending. At 10 a.m., we have the CB consumer confidence, which again, every time it's trended to that low of a reading, which last reading was very, very low, we have almost always entered a recession shortly after. So they're expecting this to trend upward, and I don't anticipate that. That will be another very big data set that will be occurring. Then we have the 5-year note auction. Now, generally, I would say that we would probably see a more neutral auction here. However, tomorrow's data sets are extremely large. We have, again, potentially the PCE, we have the ADP, employment change weekly, building permits, not so important, but it does hold some weight. GDP numbers, housing starts, PC price index, personal spending, the CB consumer confidence, which again, I don't remember which video that was exactly, but it showed it very clearly how once this starts trending downward, that's extremely, extremely bad. When we start having unemployment trending upward against it. So the 5-year auction will really take a lot of weight from whatever is given to us in the morning in terms of the data sets. So if there's going to be very, very dovish data, which that means so on pen and paper that would look like bad data sets, so very cool data sets, that would pull the yields downward drastically. If we have any of these data sets coming in hot, then that will cause the yields to pull upward quite a bit. And very, very likely, it will cause the market to pull downward. Um, just because of how hot data sets work. Even though it's good for the economy, it doesn't mean it's good for the market. We'll see though. Again, a lot of that price action will be decided in the pre-market. However, again, that 10 a.m. slot is very, very key. And the 5-year note will take precedence from whichever way the morning data really gave us. Now, for Wednesday, again, it is a short day. We will go over that in tomorrow's video.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And quickly going over the SPY technical analysis, as always, let's go ahead and make sure our daily time frame is turned on and our moving averages and Bollinger Bands. Now, as of last video, we talked about how there is heavy consolidation happening within the moving averages. Now, when we have heavy consolidation, that generally leads to a large breakout. Now, we're starting to see that breakout. We're starting to see the 5 mile pulling upward. As of tomorrow's trading session, very likely that 5 mile range will be around the 679.20. And with the 10 mile currently at the 679.84, it will be very likely pulling up to that 680 range. And the 20 mile will be very, very likely around that 679. Currently it's at the 679.23, but it will probably be around the 679.50, potentially even higher than that. So we have all the moving averages almost right on top of each other. When that happens, when that occurs, and I'll show a few examples here. But when that happens, we have very, very large moves in the market because consolidation generally creates basing moves. The market will always be in a consolidation format or a basing format, meaning it's always sitting in a key range or it will be pushing to a new range, either to the upside or the downside. With that said, as you can see, there's heavy consolidation within the 5 mile, 10 mile, 20 mile, massive move to the downside. Heavy consolidation within those moving averages again, massive move to the upside. Not so much consolidation there. We have a little bit, but not a ton. So essentially 2 times this year since the April sell-off. Here's a prior area. This was back at the end of March when we had all those moving averages consolidated again. And from that move, it was almost a $100 move to the downside. So from consolidation stems very, very large basing moves. Now, with tomorrow's data being potentially extremely large, and just to really preface this a little bit better, if we had the import data coming in correctly for the last quarter over quarter GDP, it's very, 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 very likely we would have been entering recession territory. Um, it was extremely likely we would have had a recessionary type GDP print. Now, with that said, that means that we can have a very, very large move tomorrow, with the speculation being potentially all the way from the negative all the way up to the 3.5%, even the 3.8% by some, people I've seen. That means that there's a whole ton of speculation. And when there's speculation, that means there's a whole ton of money behind movements in both directions. So while I've been saying straddle this range, straddle this range, straddle this range, tomorrow's data is pretty much going to set the trend in the next, I'd say month and a half. Now, if the data is good, and by good I mean bad data, dovish data, dovishness brings strength to equity. Okay. If we have hawkish data tomorrow, meaning hot data or, bad data, it's, you know, quote unquote good data for the market, then generally that is bad for equities. So we're still in this very, very tight range, and we still have room to pull downward. However, with the moving averages heavily consolidated, with the upper Bollinger right there, sorry, my daughter's screaming in the background laughing. With the upper Bollinger currently at the 689.57, which that'll be pulling upward very, very soon. If we have that move upward anyway, then what this does is this completes this extremely large cup and handle that we've been talking about. And there is the completed cup. And potentially, if tomorrow's news is good, completed handle. And from that completed handle, we will have an upper Bollinger move. Now, because we will have potentially an upper Bollinger move tomorrow, and potentially a lower Bollinger move tomorrow if the news is bad, um, let's kind of just go over it. So when we have the upper or lower Bollinger being approached, and it'll be inverse for the lower Bollinger. So these rules I'm talking about will only work for the upper Bollinger, but the inverse will work for the lower Bollinger, and I'll discuss that after the fact. So day one, if we're going to have an upper Bollinger move, you want the price action to secure that level at close or above at close. Okay, so it needs to be at or above that level by close. Um, it literally cannot be a couple cents below it. If it's a few cents below it, it will not count as a lower or as a Bollinger move. It's extremely, extremely consistent, but it has to secure that level. That's the day one. Now, day two, generally you will look for a higher high. And from that higher high, we're looking for bearish structure at the top to then start consolidating downward. And generally that consolidation downward is to the 5 mile. The 5 mile will be pulling upward towards us if we are pulling up to the upper Bollinger. The upper Bollinger will basically be at the 691, expecting a close at or above that level. That puts us around the 692, 693, and a higher high from that the next day puts us around the 697. I would say 695, 697. So it does really push us to about out there. Almost at that 700 range, but this is how you get that movement towards that range. Um, Again, that's if everything goes very well. So day one, close the upper Bollinger range. Day two, expect a higher high. Day three and four, expect the price action to pull downward towards the 5 mile. And from that 5 mile, either we will continue moving upward or we will start pulling downward and retesting some of the moving averages. There's not a lot of reason for us to continue testing the downside right now because, again, we generally only need to be testing the 20 mile every 20 trading sessions, and we have been, you know, around this 20 mile level or below it for quite a while now. So that means that we really have a lot of runway for the market to either buy up to the upside, test the 5 mile again, and potentially continue upward, or to break back down into the consolidation channel we have here. I'll hide the Bollingers for now, but break back down into this consolidation channel. And with the consolidation channel essentially being right where the bottom of that major buying channel's at, if we have a move to the downside, that will be breaking that buying channel. Again, this buying channel has a ton of weight behind it, so that would not be a good thing. Um, yeah, it does look good for the upside move. I do think that we will get a fairly low GDP, and because of that, very likely, um, it should pull some weight definitely into pulling the yields downward, but very likely that's should push some weight into equities unless the market takes that as okay, it's a recession. If the market takes it as a recession, then the price action to the downside could be pretty extreme as well. Now, very, very quickly going over the hourly chart just in case I see any structure. Um, Again, we are just closing this cup right back up to that 689. Um, as of the current price, we're right at 685. So that's $4 away from that. And I'll actually draw this out. But once we close that cup at the 689, generally we're going to expect a handle to start forming. And how that happens is we start having bear structure at the top. And I'll highlight this in blue to resemble that. And bullish structure at the bottom. And that is how you generally get the cup closing. And then you start having the handle built to the upside, pull downward, and then again, all-time highs. So even though we very likely will hit all-time highs in this first pulling upward, expect the massive, massive move being the cup's handle. That's if we have the, bullish upside. If we're going to have a bearish move right now, then the market is going to find rejection right in here before the cup closes, and it will use all of this liquidity to create an inverse cup to the downside. And then that would just be like that, the cup to the upside. We'd then look for a handle and potentially further downside. So yeah, that's the technical analysis for today. A little longer, I apologize. I'm trying to make these videos a little shorter. That way I can actually produce a lot more content. I could, make specific like TLT videos, Bitcoin videos, and that's something I'm actually wanting to start doing either this week or next week. I do want to try to talk about the treasury market, so very likely I will be doing a short type of treasury, excuse me, treasury slash TLT video. So with that said, I hope everyone has a safe trading day tomorrow. Take care, and I will talk to you in the next video. Thank you all for watching.